Good morning. I'm Jen Amos at Weiss Research, and this is your morning market update for Friday, April 29th. Andy Myers is off today. Stocks opened higher after hitting their best reading in almost 3 years yesterday. Earnings continue to come in. Merck reported first quarter earnings above analyst forecasts and said it continued to expect full year 2011 revenue to grow in the low to mid single-digit % range. Sales were $11.6 billion for the first quarter of 2011, an increase of 1% compared with the first quarter of 2010. Shares are trading slightly higher. Newell Rubbermaid's quarterly profit beat Wall Street expectations on strength in emerging markets and the price increases to offset rising oil and resin costs. The maker of Sharpie pens and Rubbermaid storage containers also said today it is on track to meet its full-year outlook and that it will raise its quarterly dividend by 60% to 8 cents a share. Goodyear Tire and Rubber swung to a first quarter profit of $103 million from a year ago loss of $47 million. Sales for the recent period rose to $5.4 billion, benefiting from higher prices and a 7% jump in volume. Shares of Goodyear opened more than 9% higher. Chevron posted earnings that outpaced analyst estimates, but handed in sales that fell short of Wall Street's expectations, sending shares slightly lower in the pre-market. The oil giant said it earned $6.2 billion in its first quarter, compared with $4.6 billion a year ago. Analysts, however, had expected Chevron to earn $3 a share on revenue of $66.62 billion. CVX is down less than 1%. Research in Motion shares dropped sharply Thursday evening after the mobile device maker cut its quarterly outlook. RBC Capital Markets downgraded Research in Motion and cut its price target. RIMM was off over 13% after the market opened. The consumer sector got some lift from income growth in March. Personal income grew 0.5%, following a 0.4% gain in February. The latest was a little higher than the median projection for 0.4%. Wages and salaries rose a moderate 0.3%, softening from a 0.4% in February. Consumer spending slowed in the latest month, but was coming off a robust February. Personal consumption expenditures rose 0.6% in March, after jumping 0.9% the prior month. Analysts had forecast a 0.5% gain. The slowing was largely due to a partial reversal of the large advance in durables in February. On the other hand, higher gasoline prices helped boost the non-durables component. On the inflation front, the PCE price index continued to be hot, jumping 0.4% and matching the February boost. However, the core rate decelerated a bit to a sluggish 0.1% rise in March, following a 0.2% gain in February. More economic news still to come today, including farm prices at 3 p.m. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.